The global energy landscape is in constant flux. Despite facing stringent sanctions, Russia's oil exports are surging. Data reveals a remarkable increase in shipments. Russian oil flows have risen to 3.37 million barrels per day. This represents a significant jump from previous figures. This surge is a clear indication that Russia is finding ways to circumvent the sanctions. The increase in oil flows presents a challenge to the West's strategy. The sanctions were intended to cripple Russia's economy. However, the recent surge suggests that these efforts are not entirely successful. Russia is adapting to the new realities of the global energy market. The increase in Russian oil flows can be attributed to several factors. One key factor is the emergence of new buyers, particularly in Asia. Another factor is Russia's willingness to offer discounts on its oil. This has made Russian oil more attractive to buyers who are looking for a bargain. The implications of this resurgence are far-reaching. It is a reminder that the global energy market is complex and constantly evolving. The West's efforts to isolate Russia have not been entirely successful. The long-term impact of this situation remains to be seen. The United States and its allies have imposed a complex web of sanctions on Russia. These sanctions target various sectors of the Russian economy. The energy sector has been a particular focus. Despite these efforts, Russia has managed to find ways to mitigate the impact of sanctions. One way Russia has done this is by finding new markets for its oil. China and India, in particular, have increased their purchases of Russian oil. These countries are eager to secure reliable energy supplies at affordable prices. Russia has been willing to offer them discounts. This has made Russian oil an attractive alternative to oil from other suppliers. In addition to finding new markets, Russia has also been working to develop its own infrastructure for transporting and selling oil. This includes building new pipelines and expanding its tanker fleet. These efforts are designed to reduce Russia's dependence on Western companies and infrastructure. Russia's efforts to circumvent sanctions have been met with mixed success. While Russia has been able to maintain its oil exports to some extent, it has also faced significant challenges. The sanctions have made it more difficult and expensive for Russia to do business. This has put pressure on the Russian economy. The sanctions imposed on Russia have had a profound impact on global energy flows. With traditional markets in the West becoming increasingly inaccessible, Russia has pivoted eastward. This shift has been driven by necessity. It has also presented opportunities for Russia to forge new partnerships. Asian countries, particularly China and India, have emerged as key destinations for Russian oil. These rapidly growing economies have a voracious appetite for energy. They are eager to diversify their sources of supply. Russia, with its vast reserves, has become an increasingly important partner. This eastward shift has been facilitated by a number of factors. Russia has offered attractive discounts to Asian buyers. This has made Russian oil more competitive. Additionally, Russia has been investing in infrastructure to facilitate the transport of oil to Asia. This includes pipelines and tanker fleets. The growing energy relationship between Russia and Asia has significant geopolitical implications. It strengthens ties between these nations. It also reduces Russia's reliance on the West. This could have long-term consequences for the global balance of power. While Russia has demonstrated resilience in the face of sanctions, challenges remain. The global oil market is volatile. The long-term demand for Russian oil is uncertain. Russia must navigate these choppy waters to maintain its position in the global energy market. One significant challenge is the increasing pressure on countries to reduce their reliance on fossil fuels. The transition to renewable energy sources is gaining momentum. This could lead to a decline in demand for oil in the long term. Such a shift would have a significant impact on Russia's economy. Another challenge is the potential for further sanctions from the West. The United States and its allies have shown a willingness to escalate sanctions. These sanctions could target additional sectors of the Russian economy. They could further restrict Russia's access to international finance and technology. Despite these challenges, Russia remains a major player in the global oil market. Its vast reserves and willingness to adapt to changing circumstances should not be underestimated. However, Russia must continue to innovate and adapt to maintain its position in the face of growing headwinds.